All right, let's dive into the latest earnings from Citi Trends, ticker CTRN. And wow, what a roller coaster this one was. This report is a perfect example of a good news, bad news story that gave investors some serious whiplash. So we're going to break down exactly what got everyone so excited, why that excitement fizzled out, and what it all means for the stock going forward. Let's get right into it.
Okay, so right out of the gate, you can see the conflict. This is the whole story in one slide. On the left, you've got this beautiful revenue number, a solid beat, up over 10%. That's what sparked the initial rally. But then you look to the right, and you see a big miss on earnings per share. The company is still losing money. This fundamental tug of war is what we need to unpack.
So first, let's talk about the good stuff. Let's look at what the bulls are hanging their hats on. Because the sales story here is pretty compelling. Management is painting a picture of a turnaround that is really, truly starting to take hold. And this is the headline number that really lit a fire under the stock pre-market. Comparable store sales up a massive 10.8%. You know, in this retail environment, that is a huge number. It means the core business is healthy, people are walking into their stores, and they're buying more stuff. That's the lifeblood of any retailer. And get this, it wasn't a fluke. This was the 5th straight quarter of positive comps, 5 in a row. That tells you this isn't just a one-time lucky break. This is a trend. It suggests that whatever strategy they're using to connect with their customers, well, it's working. So, how'd they do it? Well, the growth was really firing on all cylinders. They had a killer back-to-school season, which you can see in the double-digit growth in kids' apparel. Men's and basics were strong too. And the really important part is that this was happening everywhere, across all their different regions and types of stores. That kind of broad-based strength gives the turnaround story some real credibility. Okay, so sales are booming. Everything's great, right? The stock should be soaring. Well, not so fast. After that initial pop, the stock actually reversed and went negative. And to understand why, we have to flip the coin over and look at the ugly side of the report, profitability. And here is the culprit. Gross margin. This is basically the profit the company makes on everything it sells, before paying for things like rent and salaries. And it actually went down. Now, when your sales are up that much, you'd expect margins to go up, right? That's called operating leverage. So when the opposite happens, it's a huge red flag for the market. So of course, management had to explain this. They gave a few reasons. First, they pulled some of their holiday shipping costs into this quarter, which is a smart move to get ahead of delays, but it hurts your numbers in the short term. Second, they're still battling shrink, which is just a nice retail word for theft and inventory loss. And finally, they were up against a really tough comparison to last year, when they had a fantastic quarter with very few discounts. And when you add it all up, this is where you land. Even with that incredible sales growth, the company still lost almost $7 million. It's just a brutal reminder that getting customers in the door is only half the battle. The real trick is turning those sales into actual bottom-line profit. So with that mixed picture, where do they go from here? Well, management is basically asking investors for patience. Their message is, don't get bogged down in one quarter's margin issues. Look at the long-term story we're building. But the CEO has laid out this really clear 3-step plan. Step 1 was repair, just fixing the broken parts of the business. They say that's done. Now they're in the execute phase, which is all about getting more efficient and productive. And the final step is optimize, which is where they hope to really hit the accelerator on growth. It's a classic roadmap. And here's what that roadmap is supposed to lead to. These are the long-term targets they're putting out there. And they are ambitious. We're talking sales approaching $1 billion, gross margins jumping up to 42%, and a significant increase in the store count. This right here is the vision they're selling to Wall Street. So how are they going to do it? It's not just wishful thinking. They're investing in some serious tools, AI to help them pick the right products and price them correctly. They're leaning into what works, like their extreme value deals. They're speeding up new store openings. And they're launching a new loyalty program to make sure their customers keep coming back. Okay, we've seen the good, the bad, and the ambitious plan for the future. So let's put it all together and figure out what it means for the stock. It's time to make our call. Now, before we give a rating, you have to look at this. This is critical context. Over the last year, the stock has more than doubled. It's been on an absolute tear, crushing the S&P 500. And that means a lot of optimism, a lot of that turnaround story, is already reflected in the price. And that leads us to the million-dollar question, doesn't it? After a monster run like that, has the easy money already been made? Is there really any more upside from here, or has the stock gotten way out over its skis? You can really frame the debate pretty simply. The bulls are screaming, look at that sales growth. The plan is working. They have no debt. But the bears are firing right back, saying, yeah, but where are the profits? The stock is expensive now, and they still have to prove they can actually hit those long-term goals. It's a classic growth versus execution risk story.
So, where do we land? Our call on Citi Trends is market perform. Now look, the sales recovery is absolutely real, and we're impressed by it. But after that massive run-up, the stock isn't a secret anymore. It's not a bargain. The question has totally shifted. It's no longer, is the turnaround working? It's now, can they actually deliver the profitability they've promised? It's a show-me story. So if you're a trader, how do you play a show-me story? One idea we're calling the Q4 show-me straddle. The next earnings report is going to be huge for their credibility on margins. A long straddle, where you buy both a call and a put option, is a bet on a big move. You're essentially saying, I don't know for sure if the next report is going to be a home run or a total disaster, but I'm pretty sure it's not going to be boring. And finally, our standard but very important reminder. This analysis is for informational purposes only. It is not in any way financial advice. You've always got to do your own research and make your own decisions. Thanks for tuning in.